All right, good morning, everybody. So we start out with another week. We're looking at proposed steel and aluminum tariffs for any country that is doing steel and aluminum for the U.S. So that popped up what we call industrial metals. Precious metals are still up. Gold looks like it's going to leg another level. And he also proposed reciprocation tariffs this week. And we have Powell in Congress this week, too. So it should be a pretty wild week. We have European Central Bank, Christine Lagarde this morning. A couple of auctions to get through around lunch. It's the time that the European Union closes. And then the afternoon seems to be clear. We don't have a lot of economic events on the schedule for the afternoon. So it's likely going to be more of a news impact than anything else. Even the other European Central Bank speakers and Bank of England too, they'll all be done by the morning session. So we don't have anything after lunch. Not at this point. The dollar continues to be the issue. Scott Bessett's plans, his 3-arrow plan or whatever it's called, needs the dollar to continue to go down. So anytime we see any headlines with the dollar continuing to rise, then it's kind of going against the plan. So far, we're just stuck in the midpoint of yesterday. Volatility trigger in 0 gamma. The 10 and the 20-day were still holding above the 10-week. And I think if you take a look at the weekly, this is that complex topping pattern that we've been talking about for a while now. So we got the daily on the left, the weekly on the right, still holding above that 20-week. But they've been defending anything above 6,100. 6,150 is really the smackdown. We haven't been able to sustain anything above that. Now, they've come in to defend at a couple of spots. 6,000 seems to be getting a lot of defense. But when we failed to run up and get that new high here, that prolonged this topping pattern. And we need to watch this low at 60.50. So if we break that, then it's this 58.50 that comes into play, and then 5,800. So we got a trade setup that I talk about often called the failed flag play. And generally, focus on it from the bear side. And so it's a bullish setup, bullish perception. That's your flag. That's the pull. If we're looking at a failed flag play, then we would break this. There'd be like a 786. If we break that 786, we're headed for the half. But from a technical analysis standpoint, it would be this last low that we'd be looking to challenge, which is why we'd focus on 5850 and then 5800. 6,000 would be the halfway point, the line in the sand, a spot where they could potentially try to flip it and run it back up again. But if that fails, then we're going to be targeting this 5850 low. If you're shopping around for just some cheap lottos, that would be the levels you'd want to consider pricing out. 59.50 on the SPX, 58.25, or even 5800. They should be fairly cheap. You know, it's a lottery ticket, so you don't want to spend a lot of money on these. Just like if you go to the gas station and you buy a lottery ticket, you don't put a lot of money in it because your chance of winning is really small. So if you can't find a really cheap play, don't do it. Just wait, especially first thing in the morning when the options prices are all over the place at 9:30. Give it a little time. On the SPY, if we break 598, then we'll be looking for the half on this, or maybe a little less than the half, 590. And so the mid would be 595, and then 580. All right, because of the way we gapped down, it set the ADRs at a lower level. So we ran back up to Friday's close. We got the gap close. That's great. Now we're holding above it, but it puts us above one of the ADR lines. And there's a phrase that we use when it comes to using these ADRs is that if we get to one side early enough in the day, we can go to the other half by the end of the day, by the other side. Now, depending on what platform you use, if it's using Friday's close to apply the ADR lines, then we hit the lower one because they would have been centered from Friday's close. When we open at 9:30, the SPX will get ADRs right when we open. So we'll be in the midpoint. I'm pretty sure that's how it would work on the SPY too, but it will depend on your broker for that one. For the SPX, it won't matter what broker you use. It'll open at 9:30 and the ADRs will get applied. But on some brokers, SPY will run with an ADR from the overnight, and then on others, SPY will get its ADR at 9:30. Either way, you're going to see a big discrepancy between the ES and the SPY, the SPX when it comes to their ADRs today. So if we do get through the yellow one on the ES and we continue to run to the upside, one of the stopping points that you'll be wanting to watch if you're trading the futures is SPX and SPY. Watch them to see when they hit their ADR lines, because that's very likely what'll shut down the ES on that move. but that's if we go up. We kind of zero in on Friday. 60.82 is the halfback from Friday that we have to get through. And we haven't been able to do that yet. What we're hitting instead is Friday afternoon when we tried to rally back up, right? We had that failed bear flag and it tried to rally and couldn't get through that and rejected and came back down. But it left a lot of unfinished business here around that 60.75 area. And that's what we're messing with this morning. So if we can get through it, then we'll get that 60.82, see what we can get with that. This week's floor pivot is lower than last week's floor pivot, but the channel's about the same size. We're already back above it on the daily pivot. Of course, we opened underneath it, but we managed to rally back through it, and it's lower than Friday's pivot. So the fact that it's lower is bearish, and with us opening underneath it, that's also bearish. But we don't have an MDP because we've already hit it. And right now we're stuck within that channel. On semiconductors, down 9% from bad earnings. So another chip company getting whacked. Hmm. All right, last week's point of control, we've already run through it this week. We've got a high volume node at 6,100 to deal with. Otherwise, underneath this, that 60.50 is a level that should have been providing some structure, but with that gap down, we already broke it. I wouldn't look for 60.50 to offer any sort of support or structure now. We've opened the door so we can cross back and forth through that level all we want. The volume is at 52 on the overnight. That's not bad. It's within the norm. It's a little lower than what we've seen lately, but the standard is between 50 and 90,000. So it's more coming back into line with what it had been before January really kicked the volume up and spiked the numbers. So it seems a little light in comparison to the last few weeks, but it's within the norm. It is worth considering that after we rallied back up from the big gap down, we've stayed pretty distributive till 3 o'clock. It's going to be a news day through the morning, and I mean, even after lunch. I wouldn't take my eye off the news today. I think it's going to be like that for half the week. Powell's going to be in Congress this week too. Typical shenanigans. They'll ask him a bunch of gotcha questions, and he'll do his best to talk without really saying anything. It'll be like what we call it, Operation Don't Rock the Boat. $10-day, 30-minute volume profile and TPO, they're really close to being back in sync. When we look left, there's no big high volume nodes across that 6150 area. And it doesn't look like we're going to see the point of control move anytime soon. If it does shift, then 6100 will be the next spot, right? Once we lose this little distribution, which will happen today, that might be enough to drop this volume back, and we'll make 6100 the new point of control. I was hoping we'd already be back above that level first so that it wouldn't be something that's in our way, but didn't work out that way. All right, on Friday, we hit this VPOC, kind of highlights why we have that line on there anyways. Now, we're done with it. We're going to be taking it off, but I just wanted to showcase, if you hadn't known it was there, you still would have had 60/50 on your table anyways, because it's a big round number, options level. Should have already been watching it, but it helped to also see it as another pivot point, right? A point of control from the previous day. It's where the greatest amount of volume took place on the 5th, right? So 2 days previously. And we end up breaking through it eventually, but the first time we hit it, we had a rejection off of it. It's what we call the first touch play. We don't have a new one since we opened up Sunday night and we ran through where the point of control would be, so I won't be marking it. The textbooks will tell you if you're doing a volume profile that you should mark all 3 of these out. Value area high, value area low, and the point of control, and then set them forward into today's trading. I've got enough pivots. I don't need another one. But if you want more and you're not doing this, then it's something to think about. All right, we're still above the 10-week, at least for a little bit, with that rebound pop that we had in the overnight, kind of saving the day. But we're still too close to the 0 line. When we're less than 1% away from the 10-week, it can act like a magnet or gravity and kind of keep us from breaking out and continuing on. And we're basically at the 10-day. We're just slightly above it, but that don't matter. We're there. So we can cross back and forth through it. It won't act supportive or resistive. It's more of just a swag line of we need to be above it rather than below it. But we've been correcting here for a while, since late January, just crossing back and forth. This is the same thing that we're looking at on the candles and how we're in this complex topping pattern. So on the one hand, it doesn't feel very good. And we're setting that lower high, chopping about. We got inside weeks. But on the other side of all of that, it's healthy. We're correcting. And I think a lot of people would rather correct this way than get, a 2 to 4% move to the downside. They may not like that so much. Although it's faster if we correct in price, right? If we just take a good solid wash to the downside and then, run it up from there, certainly solves the problem faster. A correction in time rather than a correction in price, well, it takes time. So yeah, we got the lower highs. We're holding in this topping pattern, but it hasn't confirmed, a bearish trend. We don't have momentum to the downside. We can't say it's bullish, but on the other side of that, we can't say it's bearish. It just doesn't feel good. So we had marked out the preview for Friday's range last week, but of course it wasn't set in stone. It continued to move through the day. And now we've got the weekly expected move locked into place. We can compare that with last week, and we can see that this week is just a little bit more narrow than last week's range. All right, if we put this box back where we got it, so this week's a little narrower. The range is derived based on volatility and time. Well, we have the same time as last week, 5 days. So the only thing that's changed is volatility. This is such a small amount that doesn't even come into play. There's as much violence anticipated this week as we had last week. And that's what the market's pricing in at this point. All right, if you look at the things that are down, we're not really down a lot. The benchmark is 0.5%. So when we look at what's down more than 0.5%, we got VIX. And VIX is down over a 5-day period more than 5%. It's 1.5% today. So not a lot of nothing yet at this point. We're up China, nat gas, metals and mining, industrial, right? China again, gold miners, Bitcoin. China again with emerging markets, value, China again, cloud services. I'd be kind of careful with that one. They got beat down pretty good. It might be just a bit of a knee-jerk reaction back the other way. Plus cloud as an ETF, this CLOU. What I found is a lot of times it'll run in the after hours of the previous day, but it doesn't really run much in the pre-market. And so if there was a sentiment change between, the after hours on one day versus the pre-market in another, it doesn't very often reflect that change. Semiconductors are up, oil and gas, tech, energy. I mean, we're pretty spread out. What I'd want to see more of are the banks, financials. Yeah, see, here's the cloud computing ETF, and it's showing nothing this morning. So it might have had some moves Friday after hours, but nothing yet. So we're getting a lot of flows in the China group, whether we use the KWeb or you just start picking out the names. Baba, Baidu, JD, PDD, XPEV, Neo. There's a huge list. And they've still got this big event in March where a lot of investors are expecting China to really bring the stimulus. And they had been doing little bits and pieces of stimulus through January, but it seemed like that was more to just kind of hold the line than anything else. And, they can really bring it when they want to. So this is just a good starting point. Because when we zoom out on these and you see how bad it's been on the beatdown, they've got a long ways to go, kind of run it back up again. And of course, this is just one out of many. Now, Bitcoin's had a pretty wild ride. If you're using depending on how you're looking at Bitcoin, whether you're using one of the ETFs or you just come in and look at the Bitcoin itself, we're still under 100K. There's kind of a line in the sand we want to get through. And it's the same kind of topping pattern, but right now we're setting up for a TRB setup. That would owe us back to 107.5, back up to these highs. But we're trapped inside of this candle right here, February 3. So you can mark that one out, lay to 50% down, all of that, then look for the breakout of get through the half, then of course get through the top. Gold miners, precious metals. It's beyond the point of being extended. I think it's just more extreme than anything else. You might want to run some sort of ratio play if you're going to try to continue to run those. That way you don't miss out and you can stay long. But if it, dumps down on your head, then the ratio at least covers you. All right, the three sectors we need for a rally day: consumer discretionary, finance, and technology. You can swap some of those out with things like semiconductors or communication names, but more broadly, just tech, consumer discretionary, finance. So we've got chips, tech, but we don't have finance up enough. We need another 0.25% at least. And if you look at the little homemade ETF where we just mix, Google, Netflix, Meta, Microsoft, Apple, Amazon, make our own little homemade ETF, then we're gapped up a little bit this morning, not enough to make it count. We'd need a much bigger gap up. But when you put it on a weekly, I mean, that thing still looks really good. So keep your eyes on the news today. Make sure we don't get anything radical from Christine Lagarde and whatever these two guys are going to talk about before lunch. After lunch should be good, other than any sort of flash news that comes through. And we're just waiting on Powell. I would expect that we're going to continue to go sideways in the S&P and the NASDAQ while we wait on Powell, right? So we're recovering. It's a really wide day between Friday's high and our gap down this morning. There's no reason to believe that we're going to get out of this box today. So unless some really good or really bad news comes out, this should hold. And actually, now that we're back inside of Friday's range, you can tighten that up quite a bit and say we should stay within Friday's range. If we break down out of that, though, then the low that we set last night should stick. We shouldn't see a significant change because we're all waiting on what's Powell going to do and how much is Congress going to try to put him against Trump and get him to say things like, oh, I can't be fired and blah, blah, blah. And the whole thing's just a circus anyways. The type of questions that Congress asks, they're all just gotcha moments trying to push their own headline so they can get points. So I got for you guys, be careful, be safe. I'll see y'all tomorrow.